Imagine stepping onto a trading floor where every screen is glowing green, every voice is shouting buy orders, and the air itself feels electric. That's the vibe in crypto right now. We're not just seeing a rally, we're seeing what many traders are calling the start of a full-blown altcoin gold rush. Bitcoin is holding strong at $119,000. Ethereum is trading around $4,611. And the rest of the top 10 are moving in sync with a momentum we haven't seen since the last alt season frenzy. The top 10 coins starting with XRP is sitting at $3, Solana at $196, Dogecoin at $0.23, Cardano at $0.92, Polkadot at $4, Binance Coin at $846, Litecoin at $122, and Polygon just over 24 cents. Every one of these numbers tells a story, and the story right now is one of acceleration. This surge didn't appear out of nowhere. Over the past few weeks, a perfect storm of catalysts has been building. From institutional whispers about altcoin ETFs, to network upgrades on major chains, to whale wallets quietly loading up on positions before the public caught on. For those paying attention, the signs were there. For everyone else, the sudden upward swing feels like magic. And it's not just about price movement. It's about sentiment. Social media chatter about altcoins is up over 40% in the last week, according to data from Lunar Crush. Search volume for terms like best altcoin to buy and next 100x coin has spiked to levels we haven't seen since 2021. That's retail energy flooding back into the space, mixing with institutional capital in a way that's rarely this synchronized. But here's where it gets interesting. This rush is different from previous ones. Back in 2017, the ICO boom was almost entirely speculative. In 2021, the DeFi summer was driven by yield farming mania. This time, we're seeing adoption metrics that actually justify some of the hype. Transactions on networks like Solana, Polygon, and Avalanche are at all-time highs. Stablecoin flows into altcoin ecosystems are surging. And behind the scenes, payment giants like Visa and MasterCard are quietly deepening their blockchain integrations, signaling that the infrastructure to support a multi-trillion-dollar altcoin market is finally maturing. Still, even in this euphoric environment, smart money knows how to read the tape. And right now, that tape is telling us something big is brewing, but also that timing will be everything. Because the higher the market climbs, the more tempting it becomes for early whales to take profit. And that's when volatility can strike fast. In a moment, we're going to break down exactly what's driving this rush, the specific altcoins benefiting most, and why analysts are split on how far this can run before we see the first serious pullback. But first, let's rewind just a bit to understand the spark that lit this fire, and how it spread so quickly across the entire altcoin market. The first real spark came from a rumor, the kind that only needs a single tweet to send shockwaves through crypto. Just over 2 weeks ago, a well-connected Bloomberg ETF analyst hinted that at least 2 major asset managers were preparing filings for altcoin-based, exchange-traded funds. They wouldn't be Bitcoin ETFs or Ethereum ETFs, but baskets of top-performing altcoins. The market had barely processed the idea before speculation exploded. Within hours, trading volumes in Solana, Cardano, and Avalanche doubled. Whale tracking bots lit up with alerts. Large transactions moving millions of dollars in altcoins from cold wallets to exchanges. These weren't panic sells. They were accumulation moves. Institutions were positioning themselves early, anticipating the retail wave that always follows ETF chatter. From there, the momentum snowballed. Layer 1 and Layer 2 ecosystems began announcing upgrades. Solana's dev team revealed a major throughput improvement set to cut transaction latency in half. Polygon announced a cross-chain scaling partnership with a major cloud provider. Even long-sleeping projects like Tezos saw renewed developer activity, which in turn attracted speculative capital. Analysts we spoke to are divided on what this means. Sarah Liu, senior market strategist at Blockwave Capital, sees this as the healthiest alt season we've ever had. She points to on-chain data showing record active wallets and growing transaction fees across multiple networks. Signs of real economic activity, not just price speculation. On the other side, veteran trader Marcus Vail warns that the first wave of any gold rush is the most dangerous for latecomers. He likens the current climate to early 2018, when late entrants to the alt boom found themselves trapped in positions that took years to recover. His advice? Ride the wave, but keep your stops tight and don't ignore macro risk. If the Fed changes tone or Bitcoin dominance spikes, altcoins will feel the heat first. Historically, every altcoin surge has a trigger. In 2017, it was ICO mania. In 2021, DeFi protocols promised astronomical yields. In 2023, meme coins like Dogecoin and Shiba Inu saw wild retail-driven spikes. This time, the trigger appears to be a blend of legitimacy and FOMO, real adoption milestones combined with the human instinct to chase the next big thing. That's a rare combination, and it's why this rally feels different. If we dig deeper into on-chain analytics, we can see clear signs of a rotation. Bitcoin dominance has slipped from 52% to 47% in just 2 weeks, meaning billions of dollars have flowed from BTC into altcoins. That rotation tends to be self-reinforcing. As altcoins outperform, traders sell Bitcoin to chase higher returns, pushing dominance even lower and fueling further altcoin gains. This kind of cycle can be incredibly lucrative, but it also has a built-in expiration date. Eventually, profits get taken, dominance reverses, and capital rotates back into Bitcoin or stablecoins. The challenge is timing that pivot. Some traders swear by technical indicators like the Total 3 market cap chart, which tracks all crypto assets excluding Bitcoin and Ethereum. Others watch for spikes in perpetual futures funding rates, which signal over-leveraging and often precede corrections. But while traders debate the exit timing, the energy in the market remains undeniable. Discord groups are buzzing. Crypto Twitter is in overdrive. YouTube influencers who were silent for months are suddenly pumping out daily altcoin picks. And behind it all, exchanges are quietly reporting some of their strongest sign-up numbers in years. When this kind of liquidity flood happens, it doesn't just impact prices. It impacts the psychology of the market. Fear of missing out becomes the dominant driver, replacing cautious accumulation with aggressive speculation. That's when the term gold rush stops being a metaphor and starts feeling like a literal description. Every gold rush in crypto ends the same way, with the question, how much longer can this run last? Right now, momentum is strong, but momentum is a fragile thing. The first and most obvious risk is overextension. We're already seeing some altcoins posting daily gains of 15 to 20%, and funding rates on perpetual contracts for certain assets have tripled in 48 hours. That kind of leverage can supercharge moves upward, but it also turns pullbacks into cascades. Another risk is the return of regulatory headlines. Just because the current ETF whispers have been bullish, doesn't mean the next announcement will be. A single unfavorable statement from the SEC or another global regulator can change sentiment in an instant. Traders with a memory of the last few years know how fast the mood can swing. Then there's the macro backdrop. Inflation readings, central bank interest rate decisions, and even geopolitical tensions all have the potential to drain risk appetite. While crypto is often described as uncorrelated, altcoins in particular tend to move in exaggerated correlation with tech stocks and high beta assets when fear enters the market. Still, those risks are not stopping the inflows. In fact, Glassnode data shows a net increase of over $2.4 billion in stablecoins being deposited onto exchanges in the past week alone, often a precursor to buying pressure. This suggests that, for now, traders are positioning for further gains rather than exiting to the sidelines. So, what does the rest of the week look like? The near-term calendar is actually favorable. We have the Ethereum DevConnect updates expected in the next 72 hours, where several scaling announcements are rumored. Solana's TPS upgrade is set to roll out in testnet form by Friday, which could give it another media cycle. Cardano is scheduled to reveal progress on its governance framework, something that could appeal to both retail and institutional audiences. Analysts are watching these milestones closely. Rebecca Tran from Altmetrics Research says, if even half of these updates deliver, the narrative going into next week will remain extremely bullish. But if they underwhelm, expect a sell the news reaction. In other words, this is a critical momentum checkpoint. For those trying to navigate this, There's no one-size-fits-all strategy. Some traders will ride positions aggressively, aiming to double accounts before the music stops. Others will ladder out gradually, taking profits on the way up to ensure they don't get caught in the inevitable retracement. And then there's the long-term investors, the ones who see this as an accumulation window ahead of what they believe will be an even bigger 2025 bull market. History suggests that those who combine opportunism with discipline tend to fare best. That means keeping a portion of profits in safer assets, avoiding unnecessary leverage, and protecting gains with secure storage. Because here's the truth. In a gold rush, the people who made the most consistent money weren't always the miners. They were the ones selling the tools. And in crypto, one of the most important tools you can have is a secure hardware wallet. If you've been making gains in this altcoin run, make sure you have a self-custody wallet. Our link is below if you need one. The Altcoin Gold Rush is here. The question is how you're going to play it. Are you the early prospector staking your claim, the cautious trader measuring every move, or the investor quietly accumulating for the future? However you choose to navigate it, remember that markets move in cycles, and there's always another opportunity, if you're patient enough to wait. As always, we will see you at the top.